Hello everybody, I'm Gary Massa with Massa & Associates here at Pacific Sotheby's Realty, and I'm here with my main man, Mortgage Mike Campos, and happy Friday. You know, we were just talking about some things that are happening in the market right now, and I think it's really, really relevant and important that you know about it as well if you're considering buying a home, you know, in the next 3 to 6 months or a year. So basically, the point of our conversation was that there's been a lot of changes in the stock market. The Dow Jones was at about 26,000 points. Now we're down roughly around 24,000 points, and that's really shaken up the mortgage interest market and created some changes. So Mike, can you tell me a little bit about what's happening in the mortgage market and rates right now?
Yeah, so the Dow Jones has had a great rally. People have been very happy. It's been a great thing to see. It's normal to have a market correction, so it's normal for the Dow Jones to go down, but the move down was a little bit more dramatic than anticipated. The 10-year Treasury, which also follows that, in 2017, the 10-year Treasury was about 2.1. Today, we're about 2.8. And so mortgage interest rates have kind of jumped up a little bit faster than expected. So our 30-year fixed loans went from about 4.0 in late 2017 to we're floating somewhere around 4.5 on 30-year fixed loans now.
So that's a pretty significant jump in the last couple of months.
Yeah, it sure is. And we're anticipating that interest rates will continue to rise, hopefully at a slower pace, because our forecasts were that 2018 we'd have a 0.5 point rate increase throughout the entire year.
Yeah.
But we got the 0.5 point rate increase in the first 2 months.
Okay, so we're at expectations, what we already believe, but it happened a lot faster, so there's a possibility that does continue on the trend. Well, Mike, you were telling me about some options. You have some good news, with some of the programs that you have available that's actually could help with this situation.
Yeah, there's light at the end of the tunnel. So, we have our traditional big bank lending that we offer at San Diego Funding, but in addition to, we offer portfolio lending. And the portfolio investors are not dependent on the stock market changes in order to determine what their interest rates are going to be.
Right.
So although their cost of money has gone up as well, their rates have gone up a little slower than the fixed rate products that the big banks are offering.
Okay.
So instead of a 0.5 point rate increase, we might have had a 0.1 or a 0.2 rate increase on those portfolio loan programs.
Okay. So Mike, great information, but again, can we break it down to what most people will understand it in terms of like, what does that mean for their home purchase, maybe in terms of purchasing power?
Purchasing power. So if a 0.25% rate increase is about 5% purchasing power adjustment. So if rates jumped up a 0.5 point on you, you basically lost about 10% purchasing power. So in order to maintain the payment that you wanted yesterday, you have to either come in with more cash or look at lower sales price properties.
Right.
So luckily with our portfolio programs being a little bit higher, the purchasing power lost possibly might be in the 5% range.
Okay, that makes sense. Okay, cool. Now again, we were talking also about we anticipate this to also continue to go up, right? So what advice are we going to, or should we share with people right now if they're thinking about buying a home in the next 3 to 6 months, something like that? What should they start to do at this point?
One of my recommendations is that if you think that 2018 is going to be the year that you'd like to purchase a property, you might want to start working on that project now. I think that as long as we had your financing in place and a property came up that met the needs, it might be good to pull the trigger now to take on today's interest rates versus what interest rates we may have this summer, which we're anticipating to be higher than they are today.
Right, exactly. So I guess point being that if you're thinking about buying a home next 6 months, start considering that now, and keep those homes that you're looking at now in sight with a more reasonable payment, keeping affordability. By the time you get there in 6 months, it might be a little bit out of reach and have to reconsider the type of home that you're looking to buy. All right. Anything else, Mike, that you want to share with everyone?
Well, I'm available and I'm happy to talk with you. The loan process that we have internally here at San Diego Funding is that we underwrite and fund our loans in our office. Everybody's profile is different. We offer the big banks loan programs in addition to the portfolio programs.
Yeah.
So I'd love to provide a second opinion to your clients anytime.
Okay, awesome. So again, if you want to figure out how all of this is going to affect your situation, give us a call directly. We're happy to talk to you about it. It's better to get the information and knowledge now rather than later on and wish you had some time to plan, right? So happy Friday, everybody. Thanks again for tuning in, and we'll see you next time.